Greetings, Dr. Jeffrey Scott here doing my weekend market update. First, I hope everybody has a happy and safe holiday weekend. Um, Markets are closed on Monday. I'm doing a webinar on Monday from 11 to probably 12:30, 1 o'clock. I'll mention that in a few minutes. Um, Interesting time in the markets, I'll put it that way. That was a week of churn like I haven't seen in a long time. And I have to ask the question, as a strong August ends, what will September bring? This is part one. I'll do a second part probably tomorrow, Sunday, after going out on the boat. Um, I'll talk about the markets and a little bit about stocks today. And then we will follow up with a deeper dive into stocks in part two of the video. Again, my name is Jeffrey Scott. My email address is marketmripro@gmail.com. My Google group is called Top Down Trader. Appreciate you being here. Hit the subscribe button, hit the alarm so you get notified when I do these. If you want to get an email notification of when I post things or have change in thoughts about the market, just sign up for Top Down Trader, and I'll mention that in a few seconds. Appreciate you guys that watch it. Those of you that give me the thumbs up and put things in the remarks, I really do appreciate it. Emails, I appreciate it. I have a small audience. I don't have a mailing list except for the Top Down Trader group. And so it's only by word of mouth that people come to watch me. The sessions for educational purposes only. Anything I recommend is in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell anything I talk about. And trading stocks and options should be considered risky and should always consult your financial advisor. I I like using on the weekend the Market MRI Pro tool. I will intersperse some of the other tools as we go. I don't have a favorite child, but this is the one tool that I built all the things that I do into it. Metastock will probably be very similar when that product comes out, the Metastock add-on. Um, One other comment on the disclaimer. Somebody wrote a very, very nice comment last week about making money off the things I talk about. Look, that is a wonderful thing. I was very happy to see that. I Some people will complain that what I do is too complicated. I think those that come to any of my live meetings go home realizing it's really simple. And it may look like I'm doing a lot of things, but I'm addressing the market from a top-down perspective. What do I think the market's doing? What are the leading industry groups? And what are some of the best stocks in those industry groups? Just that's simple stuff. Okay. How you trade them is the complex thing. And there's so many different ways. And those that have been around for a while know I like options, but I trade four different option trades, 4 or 5 option trades. I try and simplify. Don't get scared off by the nomenclature and the number of screens I look at because I trade the same trade over and over again. And you know, am I doing this to teach you how to make money? I can't do that. I'm not a financial advisor. But am I doing it so I can give you the tools and the knowledge and give you any edge to help you do better than you would without it? Absolutely. So I hope you find these things of use. I take a lot of time to do it. If you're looking for the wealth charts video, you're not going to find it here. You'll find it on Saturday or Monday morning. No, this week, Tuesday morning at stocksanddocs.com. It's one of the platforms that I use. It's first one that really gave me some exposure to a broader audience by putting me inside their great platform. My Google group is called Top Down Trader. You just go to Google Groups, you look for all groups, look for join group Top Down Trader. Let me know how you want to be contacted, how often, and then you'll just get added to the list. First live meeting to talk about is Palm Beach Gardens meeting. It will never fill up. It's when we're in what's been a super strong bull, and the live interest is tepid. It's it's disappointing, but it is the world that we live in. Um, Back in the 90s and 20 years ago in the pre-COVID days, you could put 40 or 50 people in a room. I've got much more modest expectations. But look, if there's 10 people in the room, if there's 5 people in the room, if there's 15, you'll get very personalized attention. So it's Saturday and Sunday, excuse me, Sunday and Monday, October 26th and 7th. It's at the Marriott Palm Beach Gardens, which is just north of PBI. Two packed days of education and software instruction. I scheduled it this weekend because it's back to back with John Person, a great friend and trader who has his meeting a mile away, October 24th and 25th. You can use one airfare and come to two different meetings. It's 1250. Breakfast and lunch on Sunday and Monday, um, snacks, coffee, fluids throughout the day, dinner cruise if weather permits, if not a great dinner. Sunday night, either way, full service Marriott. I've got the code to get you 155 a night. If you buy, or if you come to the meeting, I control the cost on the trade station, the trading view, and the market MRI Pro. I may have some influence on the Metastock pricing. You'll get $400 rebate towards purchase of those tools. If you already have them, just keep waiting. Maybe I'll have something else for you to purchase, or I'll let you apply it to a live meeting that I do in Florida next year. So let's go. The meeting I'm going to have Monday, the link will be below. I've got some really, I think, cool new features. It's really adding scans, a trading system, and really enhancing the ratio charts feature. I like using this as an Ask Me Anything, which has become an overused terminology, but it gives you a chance to ask me and Praveen. So you'll have the trading side of the product and the programming side, although Praveen trades, I don't program to ask questions. Again, I want to demystify it. So I'm going to try and show you the workflow and how I get through this. And it really has simplified my life. And, is this one of the reasons why I'm having the best trading year in, in years? I don't know. Having more time that I can be away from the computer, and that's a good thing. So we'll talk about that on Monday. Hope to see you. I've got a few people already signed up. I always like to look at this slide for a reason. I'm looking for clues. We know that when the yield curve, this is a 10 minus 3 month on the left, 10 minus 2 year on the right, we know when it inverts and goes below this black line that every time it comes back up, although there is a lag, you get a gray bar. That gray bar is a recession. Well, gee whiz, we went below on the 10-2 and everything else. We crossed back above. The 10-3 is bouncing. But the point is, we are at that point now where we are expecting a recession to occur, but we don't know when. I do know that all these recessions occur when the Philadelphia Fed General Diffusion Index drops below minus 20. And although we did that maybe 6 months ago, we're sitting here at minus 0.3. That's not a level that we get a recession from. And before the recession starts, you'll start to see a creeping up of tightness of money. I'm using the ICE BOFA high yield index option adjustment spread here, and we're not seeing that. Why does this matter? Let's just say a bear market in a secular bull without a recession um, is 20-25% down would be a pretty bad bear market. But if we're in the setting of a recession, you could lose 50 to 60%. If you're in options and you are heavily invested, options being a leveraged vehicle, if you are in margin and you're heavily invested, when that recession led bear market occurs, you'll be wiped out. Um, I've watched a lot of friends be too invested when the market turned against them. Hence, I think one of the most important things that we do as investors and traders is money management and avoiding that blowout of our accounts. Know your news and earnings. So it's a mix. We got some ISM, construction spending, a bunch of Fed heads for a shortened week. We got Wednesday, so obviously Monday's closed. Wednesday we got Muslim and Kashkari, and then on Thursday you've got Mirren, Williams, and Goolsby speaking. So they may give us some steerage towards what to expect from the Fed meeting. There's still more data to come. I think the PCE didn't help the case of the bulls. I don't think it ended the idea of a rate cut, and it fortunately didn't come in way hot, which would have killed the rate cut, probably would have made a worse market. We still have some earnings to come as we're going to start ending this season and start wondering when the next season starts. So it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. The E index, I hate saying these things are dead because when that happens, sometimes the market rallies and I feel stupid. But this is probably could be a bear wedge. Think about a a flag, big uptrend, then a pullback, and then we go higher. A downtrend to retracement is the beginning of a move lower. I really think that we're at the end of the E index. If I think we're at the end of the E index, then I have to think that this market's going to um, perhaps get a downtrend. And I talk about September for a reason. Here is this is from, again, don't go out and buy a tool just because I use it. I have a lot of tools that I bought that I don't use. And if I try and find a nugget in many of these tools, and often it's a nugget that I can't find anywhere else or I can't reproduce as cleanly. So the tool set is called OmniTrader. I've had it forever. They actually had a wonderful deal, they probably still do, called the Nirvana Club, where you paid once and you got all the updates at no cost for the rest of the time. Not only the updates, if they had new add-ons and things like that. So I'm a sucker for programs. I have way too many. And like I said, many of them I don't use. But what I do like about this program is as part of their seasonality function, I can look at sort of a long-term calendar. So we see here S&P, Qs, the Russell, and the diamonds. So if I look at the Qs, and this is data back to 1990, you could see that in 2025 it's up 10.3. The only thing up higher from the majors is the Qs through August, which are up 11.8. You see up top the negative months in the S&P are June, August, and the biggest negative is down minus 1.1%, which is September. Now, that's great. So the average return in September is minus 1.1, but it's only down a little bit over 50-50. You contrast that with November and December, and really October, although we've had some sell-offs in October, and you see the market is up 2/3 of the time or more. So we are in a month that's historically weak. And as you go down the list, you could see not a lot of massive sell-offs, 10.9, 9.6, but in general, it is a negative month. That's on the spiders. We look at the Qs. The only two negative months in the Qs is February and September. September average on the Qs going back to 1999 is 2.2% down. Again, a little bit more than 50-50, but you have, again, 10.7, 15.6, 11.8, 20.9, 12.9 pullbacks. There is a lot of red. Contrast that with November. It's up 76.9% and really predominantly green. You look at the diamonds, its averages down September 1.3%, a little bit more than half. And again, 12.2, 11.5 down. Not a lot of double digit positive years on any of these in September. In fact, there's no double digit positive year in any of those three. And then the Russell average is down 1.7. It's down 56% of the time. I got a minus 10, a minus 11, minus 14. In 2010, the Russell in September was actually up double digits, 12.2. And I think that's the only September double digit move that we saw. So is this horrible? Is this, oh my God, we're in trouble. It's the worst time ever? No, but it's a little bit worse than good. And it's enough for me to pay attention, especially when I see other issues in the market, which we'll talk about. All right, more information about me, Market MRI Pro, what I do, the tools, the meetings, just email me at marketmripro@gmail.com. If you have customer support needs, Praveen's at coding at marketmripro.com, and consider joining my Google group. On to the charts. By the way, this is not where we're having the meeting. I have had meetings there. That is the Marriott Resort on Singer Island. Not everybody wants to pay $500 or $600 a night for a hotel room when they are going to be in a room all day. However, if you are bringing your loved ones and you want them to really be happy with you, October in South Florida is a wonderful time. The hotel's less than 10 minutes from the meeting hotel, and your family will love you. All right. If we look at how the market closed on Friday, volatility was up 2.3. The dollar was down 0.7. All the indexes were down. The diamond's down 0.15. Russell down 0.44. Spider's down 0.6. Q's down more than 1%. And Bitcoin was down 3.37. If we look over 5 days, it is really a churning week where volatility was only up 0.81 on the week. Bitcoin got clobbered down 7.26, and everything else was within plus or minus 0.27%. So despite some days with significant moves, the diamonds finished down 0.12, the Russell finished up 0.15, Spider down 0.04, and the Q's down 0.27. So really, after all is said and done, it was a nothing burger week on the indexes. The new high, new lows, the number of new lows on the NYSE are only 222 on the NASDAQ. The new highs minus new lows are both positive. They've come down from triple digits where they were maybe a week or two ago. So not weakness, but I like to see bigger numbers there. On the S&P 500 ETFs, what led? Healthcare, staples, real estate. What does that feel like? Defensive. What lagged? Tech, discretionary, industrial, somehow utilities. Well, utilities have become almost industrial and tech as they have several of them are supporting data center expansion and they're running on that. And then what worked? Gold and silver, gold and silver, gold and silver, gold and silver. Copper, China Internet, lithium, China, metals and minings, MLPs seems to be a safety play whenever the market is having a rough time. Um, and then you got Norway, which is commodity based, fintech, solar, and then cannabis is there. And now we're getting down to the things that mostly broke even. So it was I think Friday was not as pretty as it seemed. In fact, if you look over here, only 48% of the S&P 1500 were up on Friday, 38% of the NASDAQ, and 48% of the NYSE. Not a very strong day at all. If you look at sectors and industry groups, um, you know, none of the sectors were up in the NASDAQ. 36% in the S&P 1500, 42 in the NYSE. You got 50%, 34%, 53% of the industry groups. I think this market has some significant weakness that we're not feeling at the index level because it's being held up by big cap stocks. And I think that's changing. If we look at the JAS layout, this is one ones I might want to short. Well, let's go to the timing brief here. In the daily model, we maintain in a sell signal on the Qs. We are back below the WMA. Set all-time highs the day before on the spiders, and we sold off a bit on Friday. Same thing, except this isn't an all-time high, but the Russell pulling back. And the diamonds here, so the Qs are the sell signal. The rest of them are in buys, and two long head dojis, almost gravestone looking dojis on the diamonds. So has anything changed here? No. This is not the slide that's driving my perhaps increased bearishness that I've had. However, We are going into September. If we look at weeklies, they look fine, as you will see. Again, how bearish should I be, even going into the month of September when this week we set all-time highs on the spider, ended up with the indecision bar. This week, we're having maybe a spinning top here on the Qs and a little bit of a pullback, but just off all-time highs. Russell still got a ways to go, but massively off the bottom, a little bit of a spinning top. And then on the weekly diamonds, a little bit of a doji. So all of those are indecision bars. All of those could be bars you might expect as you were coming into an area that was potentially topping. If we look at indexes, short-term topping, I don't think this is the end of the rally. It may be a pause. Sometimes a pause is to refresh. Spider's big run up going into this bad seasonality, really, nominally setting a new high up here, which is great, um, but really not moving much over the last couple of weeks. All right, and volume on Friday was a little bit below average, which is what you'd expect, I think, on a long weekend summer day. So that is the spiders. Does it look horrible? Does it look like it's got to come down? No. How many times do we see the few days pull back and then we go on to higher highs? Maybe we get the few days pullback. Where do I think the first support is? The first support's probably here in the 630. Um, it's only about 1% away. 594, which would be about 37.42, is about 7% away. We've got a long ways to go before we hit these big levels of support or potential support. I don't see this being a crash. I just think we're at a place where the market's going to churn. If we look at the Qs, big move off the bottom, all-time high just around the corner back here. And we're just a few days. I mean, is this kind of a head and the shoulders? I don't know. I'm not the greatest at these patterns. Maybe. But I think more likely we have a test of the 50. And if that doesn't hold, downside might be 50, 66, 67. That's about a 12%, 11, 12% move. That's not without pain. I don't think we get there, but I do think at some point we're going to pull back and test the 50. Again, as I showed you on the last one, it is not abnormal to see a few day, even a multi-day pullback, and this one didn't quite get to support and a bounce. So the Qs, have they broken? No. We're in September. We got negative seasonality. My expectation is that we don't go far to the upside right away and that we churn and maybe come down and test one of these levels of support. Um, diamonds. Diamonds. Again, the theme of all-time highs is not far away. And so the diamonds are just off all-time highs. And how bearish can one be in the setting of all-time highs? But we set the all-time here, which was the same day we had the Eureka. We pulled back and now we're struggling to get there. Are we going to double top and sell over? Are we not going to get to a double top? And the 17, the 50, and even the 200 are close in range. We're 5% away, give or take, from that 200-day moving average. So I think it's very possible for the markets to pause here, and even a shallow pullback would not be out of the question. I could be dead wrong and they go on to new highs immediately. That's okay. I got long-term positions that I don't change in the setting of expecting a modest pullback. Here's the Russell. Again, the Russell all-time high is nowhere close. So we're not talking all-time highs, but what a move the Russell has had. This was was looking at an area that represented the gap up and the prior support, trying to figure out in the past, but I think that line probably doesn't have much relevance right here. So here's the Russell, sideways move expected. Does anything look bad here? No, it looks great, but I think timing, and I'll show you some breadth things that have me concerned. Would not surprise to see this languish in here and churn and a pullback to even the 200 here at 216 from 234 is only an 8% or so pullback. I don't think any of these pullbacks to the 1750 or 200 mean that this rally is over. Um, and how many times have we seen these pullbacks? Do we get one this time? My bet is we do. I just don't think it's going to be severe. Now, George Lee may rest in peace. When the VIX is high, it's time to buy. When the VIX is low, look out below. The VIX is low, and it stirred on Friday up 6.45% on the VIX futures. Um, a spike in the VIX will equal a pullback in the markets, but I can also tell you that how many times does it spike into that 50 and fall right back? All the time. So I'm not hanging crepes for the death of the market here. And then another thing that would be bad for the markets would be a spike in the dollar, but the dollar is bouncing off its recent lows. And you can see when I say recent lows, it's come down quite a bit. So how do I put this together with my timing model? The timing model says long term, we still look okay. And the timing model does not flip to a sell on the weekly every time we get a shallow pullback. Those cues being read on the daily tell me to be a little bit concerned. And again, I've got more things to show you that are going to push me to the concern side. I haven't said bear. I haven't said major pullback. I haven't said disaster. I expect the markets to go to sideways or do a shallow pullback. Um, but part of my risk management is to think about what if I'm wrong and it's worse. On the commodity side, we talked about gold, I think, yesterday evening, or it would be Thursday evening, and gold had a beautiful, beautiful breakout. And is gold at all-time highs? God, I can't believe that would be all-time highs. Let's look at monthlies. Guess what? At least going back to 2019, gold is at a 2 decade, or at least a decade high. It's probably all-time highs. I just don't have the interest of going back and looking. So big move on gold. Whew. Um, I'm long some gold stocks and I got some GLD. There are a lot of people that think gold could have a big move here. I'm looking at a quadruple top. If we can't clear this, then I'm not going to hold those positions very long. But I think gold is one way to be prepared for what could happen. But again, gold it's at all-time highs. Silver also doing really well. Big move on silver. Silver was up 1.89%. It's not all-time highs. You have to go back to 2011 when I think the Hunt brothers were bearing silver in the desert when it was 40s, high 40s. So silver and gold both look really good here. Um, and again, at some point you have to ask the question, are they getting over owned and overbought? And if that's the case, there we go. What was silver was up. Gold was up 0.97. Oil ran into the 50 and failed. The 200 is so far down. Excuse me. The natural gas is so far below its 200. I say it's dead to me. It's stirring, but it's in an area fraught with failures. The 10-year firmed a little bit, up 0.29, and the 30-year was up 0.76 on Friday. Um, a lot of people are concerned that when the Feds cut the long-term notes, they actually come down in price, raising yields. Um, Steepening of the curve, I guess they call that. So on the commodity front, I do like gold and silver here. On the buckets, no signal. Leave it simple as that. I don't have a preponderance build up above or below. It would be much easier to be bearish this market if we had a build up above, but we do not. On the market breadth, um, On the NYSE on the left, this was the Eureka day where I said, man, we're not supposed to see Eurekas after a big run and at all-time highs. And that usually is a calling a near a top of the market. We have nominally gone higher since that day. We pull back and we're coming up. And I kind of wonder, well, I'm not going to say that. I kind of wonder if this is it for this for right now. You could see that that stocks both the 20, 50, and 200 are near the top of their range, but they're not up where they to the highest that they've been. But it would not surprise to have a pullback from that level. When you look at the new high, new lows, they're positive on both, but the AD line's negative and mixed on the up down volume. If I look down here, this was the last signal on both that was meaningful, which was the Eureka at tops. We're going to see, do we go on, set new highs, and continue this massive run? Hard to believe we're only up about 10% on the year on the S&P. Or are we setting ourselves up for risk? Let me show you why I think we could be setting ourselves up for risk. This is the spider. This is the NASDAQ composite. This is the Russell 2000. And this is momentum, the S&P 1500, I'm sorry. Notice that except on the NASDAQ, which has been the one in the questionable daily sell signal, we're at 96% on the 13-week line, new high, new lows on the spider, 95% on the S&P 1500, and 93 on the Russell. Those are not numbers that give you the warm and fuzzies that there's a lot of room to go higher. These are numbers that say, man, it's from these levels markets usually pull back, or if they go up a bit, they really set up a higher one of those numbers where they always pull back. That is concerning. What is concerning to me is on the NASDAQ, which is not far from all-time highs. Why is their AD line still down in the toilet? Um, why on S&P 1500 that set an all-time high on this day am I showing divergence on the AD line? There's so many reasons that I'm concerned short term for the market. And let me be very clear. I'm not saying the market goes to zero. I'm not saying that I expect a massive pullback. We're in a good economy. You're not going to see that without some event. But I do think we're overbought. I do think this market's going to pull back. And is it a 2%? Is it a 5%? Is it a 10%? I don't know. I'll watch it every day like you do. But I think this we're set up going into September to have some fireworks. Not trying to scare anybody. And oh, by the way, I am still mostly long, big cash position, took some profits. I have a nice position IREN. I took some of it off with the move on Friday, one we've talked about. I'll only talk about stocks pretty much that I've told you about. Um, and not, but I also did buy, and I will regret it, and I hope I regret it because it means the market goes higher and I make money. Is I started nibbling some contra ETFs on Friday just because of the calendar. All right, so that's my market thoughts. I could end it here, but let's just take a look at some more things. Let's go into the JAS layout. Actually, let's look at ratio charts. One of the things that I'm going to introduce on Monday is these are hourly. We've now added daily and weekly. If you wonder why everybody talks about tech, 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 and you look back since 2020 and maybe even 2015, about the only things that have outperformed the spiders have been tech and communications. It's really amazing looking out at the longer time frames. I can't wait to show you guys. But what do we see right here on Friday? A lot of, staples, was defensive, but they're coming off of a low. Industrials is weakening, utilities is weakening. Real estate's bouncing here with the rotation into defensive plays, as is healthcare. Discretionary gave up something. Technology, which has been a big leader, is pulling back. Financials and energy showing a little bit of strength. Rotation, rotation, rotation. I could be dead wrong on market direction, and we could go on to higher highs, which just could be rotating into new inventory. We'll see. Into the JAS layout, let's go to the top down 3679 stocks. So I always look at different ways of ranking. The easiest way I think is to rank by percentage move. And you could see the technology and communications were negative. These were some of on the S&P 500. You might say, but Jeff, these numbers look very different. How do you explain that? And I explain that because I got 3,600 stocks in here. Every stock in my universe is put into a sector and an industry group. So these are the Jeffrey 3700, not the S&P 500. And that 3700 will vary because you got to be above $1 and 100,000 shares to get included. So let's rank these by short-term momentum. Energy, real estate, materials, and healthcare are the top four of the 11 sectors. We'll take a look at those. If we look at what we have here are going to be those industry groups that are in those. Once I highlighted those, we took out everything else. Now let's do the same thing, rank them by 2-day momentum. Other precious metals, silver and gold, healthcare plans, pull, 1, 2, 3, 4, 5, pharma, 6, 7, 8, 9, 10. So what we've put together here now are the top sectors and the top industry groups in those sectors. These are the stocks. Let's quickly come in here and let's put on a $5 and 500,000 share filter. And what we have here are 122 stocks in the leading groups. Let's keep with the theme. Let's rank them by the 2-day momentum. Let's take a look at some of them. I was a little surprised to see this sector come in the top 10. But this is Elevance. They are the parent. If you have Anthem on your for healthcare, and they're the Blues plan in 14 states, then you are part of Elevance. Like the commercial payers, they've sold off hard. I guess you get to a place in time where they become cheap. If you look at the fundamentals, they stubbed their toes in July like the rest of their industry as their costs in Medicare Advantage outweighed their expectations. Good revenue growth stalled out here, multiple 15, not a high multiple when the market's at 26-ish. And you look at, they even pay a dividend of almost 2%, $6.68. I guess you'd be buying this stock here or any of the ones like it. Here's Molina, Humana, United. So we'll go down there because they're a value play and you're going to pinch your nose and know they're going to come back. I don't have a problem with that. It's not buying growth, but I did buy when it was 69-ish for the same reason I bought CVS. And CVS has rallied a little bit. I was late. I bought it here on this candle-ish here, one of these two candles, and it's had a nice little run. So Elevance, AEM, when I say gold and silver, gold and silver. This one has gold and silver. Beautiful uptrend breaking out. Is it all-time high territory? By far. Does it make money? I don't know. Let's open this up. Look at the earnings per share growth. This is gold. Look at the revenue change. Surprises. Multiple less than market, pays a small dividend. I've liked AEM for a long time. NeoGenomics is a genomic testing company in the same place as, but not nearly as executed as well as something like Guardant Health and something like Tempus, which has had big runs. This is a recent IPO. Go back here. Do I like the chart? It's well below the 200. Looks like those gravestone dojis. Agilent, um, they make some of the tools that go into some of those labs. I do like things that's breaking above the 200 here. Had a big volume on this candle. It looks like a earnings day. 827, not much growth, below market PE, small dividend. Relative strength is turned up, volume is turned up. I've got nothing against that one. Molina Health, as I said, these are becoming value plays. Humana looks different. And the interesting thing about Humana is, it has come down, but unlike the others, it's already broken above the 200. This thing's like all Medicare Advantage. And I guess they must have given a nice projection. Let's see. Well, this is the question. Why is this one up so much when everything's down? All I got to do in my product is Praveen's hook this up. You can go in and read more. Um, ups EPS view. So something to take a look at. Maybe Humana is the one to buy, or if you believe that Humana is just setting up the way that the others are going to go, then maybe you buy one of the ones that's at a bigger value. United Healthcare really led this thing down, and it's interesting, despite increasing federal and lawsuits. Um, you see Buffett bought it, it's up 14%. Michael Burry has bought it. Um, so sometimes it's good to buy these fallen angels. And this was a fallen angel, folks. Um, wouldn't you have liked to put all your money in Humana in 2013, I mean in United in 2013 at 70 up to 600? Fallen angels. Interesting, falls right down to the 200 period. Waters, like Agilent, I think makes some of the tools. WPM, I liked it a few weeks ago. I still like WPM. This is one of the more of a pure play silver. I mentioned Garden Health. This one's on a massive run. When this first came out, it was an expensive stock, and then it's pulled back over years. This is a cancer testing predominantly company, um, and they're able to give you your genomics issues related to your tumor, and they'll do it by looking at blood, not even a biopsy of the tumor. Um, you put on monthly, it looks like it's a pretty fresh breakout. And you could see this is broken and running. Is it extended? Probably 100%. So I'd probably wait for a pullback. Some of you have asked about the minutes, hourlies. Here is a one. Let's say I want a 5 minute chart. I hit 3, 4, 5, and I type minutes. It flipped to a 5 minute chart. Let's say I want a 1 minute chart. Here, since I'm already in minutes, I hit the enter key. And I think I already switched to minute charts. If I want a 4 hour chart, there's your 4 hour chart. If I want to go back to a daily chart, let's bring this back to one. And there's your daily chart. I'm hitting the enter key to switch them. Um, Royal Gold, RGLD, lower in the pattern, but looks like it wants to go higher. PSA, one of these storage REITs. You look at the dividend, which is only 4.38% on this guy. Um, Slow mover, but steady Eddie on the earnings front. I think this is about the dividend and safety. Thermo Scientific Fisher, I like the breakout above the 200. I actually am in this stock here. Kind of a cup handle and a breakout, I guess. Like Waters, like Agilent, are making a lot of the tools that some of these lab companies use. HCC is Warrior Met Coal. You don't want your house to be heated by coal, and you don't want to work in a coal factory. But there are times in the year when coal gets strong, and we are going into the fall and the winter. And unlike seasonality of the market, we're going into a stronger seasonality period for Warrior Met Coal. There are other stocks I like here. Newmont, pretty steady Eddie uptrend on the gold. Gold Fields, a smaller gold stock, looks like it's ready to break out here. So This is just top down at its best. Pick the top sectors, rank the industry groups, and see what you got. Now, let's take off the sectors. Now I got all the industry groups. And let's see which ones we added. So we added electronic gaming. Take this one off because I already looked at it. Industrial specialties, consumer electronics. Let's just look at these here. So now I would have looked at the top 10, but not just caring about which sector they're in. So let me just clear those. All right, so these are the top 1, 2, 3, 4, 5, 6 that were in the top of the heap, but were not captured when we looked at by sectors. And let's just look at the same vehicle. This one had a big move. I never look at those because it's too much of a story I got to go figure out. But something happened, big gap up, closed at the bottom or in the middle of the channel of the candle. Zep Health, I'd probably want to go look at what this company does. Up, pullback, breakout, pullback, and it looks like it's breaking out again with relative strength at OBV. Never heard of them before. Global smart wearable brand, landmark partnership with Ruth Croft, big runner. I'd probably want to look at it. Does it have any revenue or earnings? It's got a little bit of revenue, not much revenue. Kind of a teeny weeny market cap. Might be too small for me. I might take a look at it. Constellation Brands. Are people going to start drinking again? Robert Half International Employment. Again, we're rotating into lousier sectors here. These are not great charts. Manpower, Smart Digital, Billy, Upwork. So this one looks interesting, as did the last one. It's above the 200, retested, and now moving higher. Strong relative strength in OBV, not extended. So that is how I use my product to do top-down investing. What chart pattern you like may be different from the chart pattern I like. I like buying breakouts. I like buying breakouts that retest. I love buying from a flag. Here's your pull, there's your flag, there's the breakout. I also like to do bottoms up. And so just very quickly, let's look at my favorite scan in the bottoms up. Here's that 3,700 stocks, 3679. Let's do two things. Let's go to price, 5 and 500,000 shares. We're in a long-term bull market. I want to be above the 200. I want you to be pull back in an uptrend above the 200. I got 312. Now I'm going to rank you by my impulses. What are my impulses? These are those dots. These are things like volume, breakouts, momentum, gap, and then two trading systems. Why? Because when I study hundreds and hundreds and hundreds of charts, I don't want to buy things that are going sideways. I want to find things that are starting their big moves. And they're almost just like this was down here, associated with these blue dots. So let's take a look. SA, Seabridge Gold, cheap gold stock, nice uptrend. And look at this. It had volume, CPR, volume breakout momentum out of a squeeze, good relative strength at OBV. Joy, I don't remember what Joy does. Doesn't really matter. Decent earnings per share growth. Um, Revenue's kind of flat. Doesn't it pays a bit of a dividend, $1.85 on 55. So isn't that like 2% or almost 4% rather? I don't know why it says zero, Praveen. We'll have to look into that. It may be looking at the last four. And then here's a few other fundamentals for you. Don't know what it does. I'd have to do a little bit more research, but uptrend, pullback, sideways move, and a breakout off of the 50. The new release that I'm going to show you on Monday will allow you to look for stocks crossing above or below major moving averages, stocks sitting on them, and combining that with other scans I think will be very useful. IPDN, this is what I said I don't know much about. I would have to look at it. Great looking pattern, but I always wonder about things like that. Herbalife, uptrend, pull back to the 50 and a breakout. Goldfields we talked about. Don't know anything about this. Uptrend. Sideways move. Pullback. Breakout on massive volume. 4 dots. Relative strength at OBV. Probably getting close to extended. And you could see here, earnings are, yeah, they have great earnings on August 29th with a massive surprise. I may have to go and look up what this company does. That's one thing I like to do. Baba, boy, this one break out. This one looks interesting. For how long has Alibaba been suppressed? This used to be such a great stock, and partly because of the China connection and things that are going on with our countries. But boy, massive breakout. I think we're going to find, um, I think it had earnings, AI and e-commerce, 829. Let's go look at what these look like. Hold on a second, got to answer the boss. All right. So Alibaba, it's interesting. They didn't have earnings per share growth or a surprise. Um, but what they talked about, and they also talked about building competitive AI chips to NVIDIA, the market seemed to like. Lastly, I call it my secret weapon, but I didn't know it was until I built it and they said, wow, 2 days of momentum, 5 and 500. Let's look at above the 200 and GTLS. That's a takeout. Let's pull off one of those filters. So let's just go 2 day momentum, 5 and 500. And after a tough day like yesterday, or not tough day, but not a great day, we might not see one. Yeah, all we're seeing is chart industries, and this is a takeout. So we don't care. All right, I will see you all probably on sometime Sunday late. And on Monday, we will have our live session. It's my favorite time of the year. I like Labor Day because I got the extra day off. I like my boat, so I'm going out on the boat. But I really love Michigan football. So go blue. And if you're a Buckeye fan, win every one of your games until November. We'll see you next week. Or we'll see you in 2 days.